Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
And welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. This week, as well as every other week, last week I took a bit of a hiatus, so if you had watched the show 2 weeks in a row, you saw that it was the same show. Appreciate your patience while I was taking a little break, little mental health break, actually. We have a lot of kids that are all over the country, and COVID with the vaccine rollout has been stressful because those people that have gotten the shot, great, but those people that are waiting in line are very anxious and wanting to get back to some semblance of a life that they remember. Although, to be honest with you, I don't remember life before COVID. I just remember, I guess now, thinking that this was something that was temporary. But you look back, and Daryl, you could help me with this, at all the different arguments along the way of whether it's real, whether it's unreal, whether they're maskless, and all the little iterations of who to believe, who not to believe. And it's just incredible at this point, whereby we are still not quite sure whether the vaccine itself is 100% of not giving, whether we should be listening to Dr. Fauci, and all this affects how we do real estate. What are your thoughts on that?
Well, my thoughts are, if you're going to have a world-class expert on a subject to consult or advise, you should listen to him and you should pay attention to him, because you have to pick a horse in the race, right? And,
right.
And the one that you pick, you got to put on the saddle, you got to get on the horse, and you need to ride.
I 100% agree with that assessment. I've always thought that the people who are in the medical side of this, and this goes to, I live here in Los Angeles County. For those of you who are in other places, the Albuquerque crowd, thank you for listening. And obviously up in Las Vegas, as well as the Tahoe area, it's great. The Inland Empire, our strong KCAA and KMET people, thanks very much for listening. But everybody's got, an area. Here in Los Angeles, we have a terrific county health officer, and she's been just right on the mark. And this goes to everybody. Everybody's got a county, a city, a place whereby it's not only just a national, but it's local. And they've all been rowing the boat pretty much the same way. So I've always thought that it was a good idea to follow what they were saying.
Agreed. And, I know who you're talking about, the county health expert. And I mean, there were days where she was doing her press conference every day and she looked rattled. She looked frazzled. She looked beaten down. I mean, you could tell the pressure was having an effect on her, but she hung in there and she was there every day and she showed up and she did what she was supposed to do. And that's what counts.
I agree. I think I bring this up because we look for stability in the economy for the real estate market. Now, the real estate market, as well as the mortgage market, both of these have been excellent during the pandemic, almost too good to be true. And those of us who are in the business can attest, as busy as it has ever been. And we've had a number of different ways to show that, either by the disparity between those that can work during the pandemic and those that can't. Those that can't have jobs that are in retail, for instance, or you're in a restaurant, or you do a lot of customer service face-to-face, or you work venues, stadiums, or concerts, or you think of all those people who have been hurt. There's probably 10, 11 million of these people across the country, yet there's this whole other side, and I'm a member of that side, of the people who are working, making more money than we've made in decades, really. And as I've said on the show before, Warren Buffett says, what rains gold, put out a bucket. Well, it's been raining gold in our business. But how does this particular divergent way of looking at the economy, and we talked about it too, K-shaped recovery, right, Daryl? Isn't that what we were saying?
We were talking about K-shaped recovery, and the other thing that bothers me a lot, and I just mentioned, I'm sure that you will jump on board with this, is, here we are, we're being careful, we're being cautious, we're doing, what we can do to try to make things right and get things better. And then you've got these idiots at spring break all over the country, half naked, no masks, rubbing together, having a fit, which I agree with all of that. It's fun to do. I've been there, I've done that, but
Yep.
not now. Not
And
now.
that's I guess at the crux. In our business, we're able to blow off steam by doing business. Whether we help somebody get into a house or refi somebody to save them some money, this is our way to be able to continue to ignore COVID. Now, yes, we all have been inconvenienced, and I would say that for the crowd that I live with here in Malibu, California, right? I mean, people are stressed, but it's not the same as if you aren't working and you've got family members crowded into one apartment and you don't know what's happening when they go out the door. That's a different kind of stress. People who look at the situation of real estate, who look at it whether they can afford a house, the answers to those issues of whether you can afford a house usually lie at its root at whether you're working or not. And for those people that aren't working, there is no way to get into the economy. The question of whether it will last forever, whether these people will ever recover, and that's a real question, and whether the economy will pick up enough steam to be able to replace the type of job with those people with those types of skills in order to be able to effectively get into house buying. House buying is my mantra. If you can buy a house, then you're in the game of American wealth. American wealth is usually passed down from one generation to another through the real estate. What happens is that you're young, you buy a house, you pay it off, you move up and to get another house, or eventually you have a family, and when you pass on, that particular house becomes your heirs house. And that's how you're able to stabilize both the economy and get people to buy into the system, which has its problems, right? I mean, if you had the foresight to know what you know today at the beginning of the pandemic, how would you have chosen a different economic path forward? How would you have dealt with what you know now is to be something, if you're in the people that aren't working, that's the question. How would you have handled this differently? Is it the federal government's job to bail you out? Is it the state's job to continue to stop people from getting foreclosed on, to stop the moratorium? These are all questions about which we are going to have answers from the federal government, from the Biden administration, whether we move forward in a way by which is currently an anathema to 50 to 60% of the people, i.e., government intervention in long-term economic stability. Now, we've had the Fed has been buying bonds, the Fed has been buying mortgage-backed securities to the tune of $120 billion a month. I was reading online today about the difficulties of why, when debt has been purchased and sold so readily during the last year, actually it's been more than that, it's been 10 years since we had the Great Recession, a slight fluctuation in interest rates really hurts the long-term debt of the United States. Because when interest rates were at 18% during the Carter and Nixon administrations, the public debt wasn't that great. So to have the interest rate go up on $1 million by 18%, oh yeah, it's a lot, the percentage, but the actual dollar figure is not that much. However, if you go up a quarter point and your debt is $1 trillion, well, that's a big number. So the economic stability and why inflation itself has become the watchword or buzzword. Now, what bothers me about all this is that it's not constantly the same. Each administration comes in, has a different view, and all of a sudden the inflation birds are out on this administration, when during the last administration the inflation birds weren't out. We were dealing with a different set of priorities, but the problems remain. We've been borrowing money like drunken sailors and printing money and having QE 1, 2, 3, and this would be QE 4 that we're in currently, since 2008. The mortgage meltdown. Where is it headed? Well, for all of us in the business, in the mortgage business, we're hoping that the stability that we've seen during the last 12 months in interest rates low will remain that way, but they're not remaining that way. We've currently got a 30-year at 3.43, a 15 at 2.88, FHA at over 3 now, and 3.35 for the jumbo. This is the reality of what we're dealing with. This is what we're keeping an eye on. We got a lot of year ahead of us. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in each and every week. We're on a number of different stations in some great many places. One of the stations that we are at K Tahoe, up in the Tahoe area, and visiting us from there is once again Julie Peisner, who works for Sotheby's Realty, to talk about what's happening in the market there. Julie, how are you?
I'm well, thank you.
Excellent. So how is the weather up there? First of all, it's a little bit breezy down here in SoCal.
Well, I have been back and forth almost every week between San Francisco and Lake Tahoe. So
Right.
today I'm in San Francisco,
Oh,
and it's gorgeous.
well, you are our correspondent in that neck of the woods, and that corridor really from the ocean all the way to Sacramento is really sort of your wheelhouse right now. Tell us a little bit about what's happening. I get the mixed opinions and reports about real estate in San Francisco. Some weeks it's down, but some weeks it's up. Where is it this week?
It is. I've been doing this in San Francisco for, probably about 16 years.
Mm-hmm.
And this is about the wonkiest market I've ever witnessed.
Right.
It is, it's not consistent, I think is the best way to say it. During the pandemic, the height of the pandemic, it was, really slow, like things that you would anticipate and expect. It was slow, prices, kind of tapered off, but then towards, we're in spring now, so probably towards the end of last year, we really started to see quite an uptick in activity, especially in the single-family home market. That market right now has completely blown up. I am now feel like I'm back in 2017, where we're writing multiple offers on properties, competing with all cash buyers. Prices are going kind of bananas, and it's not like that in the condo market at all. The condo market is much more stabilized, able to negotiate on price. You can have contingencies, not seeing as many, multiple all cash offers. So they're two very different markets in my mind. And that's probably the first time I've seen that happen in a really long time.
The divergent way that condos versus single family homes, is that because in the condo market you're seeing more transients, people wanting to get out and maybe get more for their money somewhere else and work from home, which is sort of the mantra from last year on a lot of big cities? Or is it just because single family homes are a better investment?
I think that, part of it is people want more space, so they're looking to upgrade to single family homes.
Right.
Taking advantage of the low interest rates and the prices that, were kind of stabilizing. And then another factor is a lot of people left the city. It's, probably not the mass exodus that everybody's been kind of talking about, but a lot of people did leave, but they left certain parts. So, the more heavily populated tech areas like South Market, South Beach, that's where the condo market is probably, dropped the most. In other parts of the city, where it's still really desirable and we're low on inventory, is better. So there's a couple of things that are diverging and making the market kind of the way it is. It's the complete opposite in Tahoe, where basically everything is going and flying off the shelves, no matter what it is, at minimum of 20 to 30% over the asking price. Tahoe is still pretty crazy.
No, that's interesting. And do you think that is the exodus from the city, or do you just think that people
Part
are
of it.
looking? Yeah. Okay.
Yeah. Part of it is. I mean, again, it's the ability to work from home.
Right.
possibly indefinitely, depending on who you're working for, and there's more flexibility. And even with prices, you know, having gone up by like 30 to 35% in Tahoe over this past year, it's still more affordable than San Francisco.
Right. And what is the commute if you had to go back to the city, which I'm not sure there is that commute anymore,
From
but
Tahoe?
maybe.
Well,
Yeah,
because I do it on my
I know. You're the expert.
It's about, from where we are on the North Shore, it's about no traffic, just slightly over 3 hours.
Okay. And how far to Sacramento?
An hour and a half.
Okay. So you're between
So,
cities
I mean,
and really.
yeah, like if you work in Sacramento, like that, you know, is much easier.
Right.
Or Roseville or Rockland or any of those cities around Sacramento, or even Davis, it's a much, you know, kind of quicker commute. But, you know, once things get rolling again and people are back out, like, then you start to see traffic increase to 4 hours. And, you know, like, I remember back in the day, like, the cardinal rule, you never leave San Francisco on a Friday afternoon to go to Tahoe. Never.
Right. I agree. No, it's and I've lived in many major cities, Los Angeles being one, and it's the same here. You want to go anywhere, you're leaving Thursday. You don't want to go Friday anywhere.
Yeah, you leave Thursday
Right.
night, or, you know, Friday late night.
Right.
And, you know, you got to time it, or else you're sitting in the car for 5 hours, and nobody wants to do that.
Nobody wants to do that, although I did see a report on NBC News a couple nights ago about how the traffic patterns have permanently been altered. And of course, I don't know who's coming up with this, but even in Los Angeles, going on one of the major highways here, I see traffic now that I hadn't seen in a long time, just because of the anticipation that, you know, this COVID problem is going to go away. And it's going to go away, I don't know, 2 months, 3 months, whatever it is, it's going away. So anybody who wants to get a jump on it is trying to get on the highway today. They don't want to wait till it's, you know.
People are back. I mean, I can already see the traffic. I can already see the increase in kind of in just general activity everywhere. Right. And so that's why I think the market kind of went a little nuts, because people were thinking, oh, this may be my last chance to get a deal before it really comes back. And so, you know, we have this big surge. And, you know, so now but again, it's single family inventory in San Francisco has always been historically low. So, you know, it's never been a great market.
Let me ask you a question. If we're talking about 11, 12 million people still out of work, and those jobs, whatever those jobs are, whether they're in retail, whether they're in restaurant, whether they're in large venues, stadiums, or whatever those jobs are that people are currently not working, can any of those people, even if they get those jobs back, afford any of these areas?
I think that most of them probably were not living in San Francisco. Even if they were renting, they're probably renting outside of the city, whether, you know, that's north, south, or east. You know, it's pretty difficult to afford, you know, even the basic rental housing in San Francisco, even though the rental market has gone down. So I don't think, I mean, even though we have a really healthy minimum wage here, and, you know, most people pay over that, I don't think that, you know, many of those people were probably looking to purchase homes.
Right. I don't think they can afford it. I think that's what you're boiling it down to. And I think that's exactly right. Yeah. And we talk on the show about affordability. How are people supposed to get into the American prosperity if they can't own a home? That's the number one way to do it. And I just don't know what the answer is unless there's some, you know, different way to build and have these opportunities available. Listen, we're about a minute and a half left. You want to give people a chance to give you a call if they need a terrific real estate agent in both San Francisco out in Lake Tahoe.
Absolutely. My phone number is 415-823-0824.
Okay, excellent. And you work for Sotheby's Realty. How is your company handling, COVID? Are they opening new offices? Are they hunkering down? I mean,
we actually just purchased a local boutique firm up in San Francisco, McGuire. So, you know, I mean, Compass kind of came in and swallowed up a lot of the other firms. Sotheby's was already, a big global company. Our offices have been open to us because we're considered essential workers in San Francisco.
I see.
And we actually this year, our office was the number one office in the country.
Congratulations. Good for you.
Yeah.
Hey, I'm getting the high sign that I got to go. Julie, thank you very much. This is Julie Peisner, of course, from Sotheby's Realty. Thank you very, very much.
All right. Take care.
Take care. Bye. That's Julie Peisner. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, listening to the show, or watching the show. If you want to watch the show, you can go to YouTube, Jeff Barton, the Mortgage Voice. That's where you can see us. We're also on a number of different podcasts, as well as a new podcast. Daryl, do you have the list of those for me, please?
I do. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, and now Podclips.io. And your first show is posted there. It looks great.
Oh, excellent. Podclips.io. They got a lot of information from a number of different industries, the entertainment industry for one. Ours is financial, of course, mortgages, real estate, a couple, 3 shows up there. You should check it out. It's a good place to go and see. If you see any of these or hear any of these, click that you like it or join up. Best thing to do is help other people find us. And the only way to do that is to make sure that you're one of the people that can listen, and do like the show. We try to bring differing opinions. Mostly it's about real estate and mortgages and about whatever the rates are today and how we get those kind of rates. We delve into the fairness of housing as well as the availability of housing. And one of the great people that comes to the show quite often is Connie Hernandez. She's in the Southern California market over in the Covina area, West Covina area, the Inland Empire as well, San Bernardino and Riverside counties, where we have a couple of great radio stations that hear us. Connie is here today. Thanks, Connie, for joining us. How are you?
Thank you, Jeff. I'm doing great. Thank you for having me on the show.
Thank you very much once again for coming. Okay, we're trying to get a worldwide view, i.e. every station that we have. We're trying to get the area that the stations are located and what's happening in the real estate and in the mortgage market. Give us an idea of what's going on over there.
Well, there have been a few small, I don't know, some people small, some other people large changes. On the mortgage end, Jeff, what I'm seeing is that we're opening up programs that we hadn't seen very available for some time, and I think that was due to the huge change in the interest rates, which obviously benefited a lot of people.
Right.
And these programs that I'm talking about are first-time home buyer assistance programs. So for those people that can still take advantage of the low rates, because even though they've creeped up a little bit, they're still amazing rates. So for people that are looking to buy their first home, they need a little help with the initial down payment. With an FHA program, there are more lenders willing to do those types of programs now, where that had been closed for a little bit. Even CalHFA has now made itself more available to your first-time home buyers. So that's good news for our first-time home buyers.
Yes,
Where
it is.
we do
Yes,
need
it is.
to be aware is for those people that have multiple properties and are considered investors. Once you have more than one property, a lender is going to consider you an investor. So for those people, if they plan on refinancing and if they can find a lender that can still offer them the good rates, they should do it now, because that's changing. It's going to become very difficult to refinance an investment property, especially if you're considering taking cash out for any purpose. So those are some of the changes on the mortgage end. And unfortunately, on the real estate end, we're still seeing a lot of competition for properties. So there's a lot of people out there looking, not enough homes to help everybody.
Okay, a couple things. Let's unpack that just a little bit, and I hate that term, but I used it anyway. So the affordability, what you're talking about here is FHA opening up some down payment assistance programs in order to affect the affordability. More people that can buy a house as a result of these programs really means that people who have had marginal income or some other issues now might be able to get into a property more easily than they used to be, and that really improves the affordability. Is that going to change without more product on the market?
I imagine it will. And
Right.
I definitely imagine it will. It's always going to be tough because inventory compared to the demand is low right now.
Right.
I work with a lot of realtors in my area from San Bernardino close to even all the San Gabriel area. And I'm hearing the same frustration all the way around. So unfortunately, I don't really think that having a first-time home buyer program will help you get into a home. But for those situations where your offer is getting accepted, and you meet all the other requirements, your credit qualifies, your income qualifies, but you're just short a little bit on your savings, this would be an excellent way to still be able to buy a home and take advantage of the rates.
What are the names of those programs, and what are some of the parameters in order to qualify?
Well, there's several out there. I mean, there's
Uh-huh.
there's literally more than I can probably even go over on our short time today. But for the most part, the popular one here in California, obviously, is the CalHFA.
Yep.
That's a government program, which basically what they're allowing you to do is take a second, which can be forgiven over time. You do have to meet qualifications based on your median income requirements. You do have to meet some minimal credit requirements, and you do have to attend a counseling class. So that's the most. I would say those are the three main important things. And then depending on the area you're purchasing, whether it's LA County, Riverside County, San Bernardino County, those particulars will change. Now, the other programs that are also available out there are driven more by independent lenders. There's a lender that we work closely with that is offering a down payment assistance program as part of their internal program, basically giving you a second. So, for example, if you're wanting to do an FHA loan, but you don't have your 3.5% down payment, which is required, they will also give you a second. It's not forgiven. It is a second, but it's at a very attractive interest rate, which is right around the 6%. So again, for those that maybe want to take advantage but haven't been able to save, this is a good way for them to be able to take advantage and purchase a home and not be restricted by not having enough savings.
Okay, and what are the loan limits in your area for an FHA file, just to determine, so people hear 6% and they go, oh my God, yeah, but you're only borrowing maybe $15,000 at 6%. You're not borrowing the $500,000. So what are the loan limits out there?
Correct.
Right.
Well, more so than the loan limits in LA County are fairly high.
Yeah.
But what I can give you on an average, what the sales prices are, which are probably a little bit more relevant, like
Right.
in the Covina area for first-time home buyers, they're still considered pretty high, but for a single-family residence, anywhere between 12 to 1,400 square feet, you're going to be paying in the mid-5 to upper 500s.
Right.
So if you're considering, let's just take an average of 550 times 3.5% down, you'll have a small second of 19,250. So for the Covina, West Covina, or I would say San Gabriel Valley area, for an average home for a first-time home buyer, it's a second of around $20,000 at a 6% interest rate. So it's really not a bad situation because you can really focus on paying that off, and now you're focused on your first after that.
Right, exactly. And I think for people to understand that, because first, like an FHA loan, I think they're 3% now, right? Something like that, a little bit low, a little bit above, but around 3% is an FHA interest rate.
An interest rate?
Yes.
For the right, correct. High twos, low threes.
That's right. Hey, Connie, you have so much knowledge, and your ability to really pass that knowledge on to both the audience that listens and to your clients. Let them know how they can get in touch with you. So if they need a terrific loan officer in California or any number of places, they can contact you.
Well, thank you, Jeff. Appreciate it. Yes, they can reach me. I'm here in downtown Covina on 101 North Citrus Avenue, Covina, California. You can reach me on my direct line, which is 626-422-2017, or the office line, 626-918-2419. Happy to help.
Connie, thank you very much for coming on the show once again. You gave us a good education today on the down payment assistance programs, which really can help a lot of people, especially out in that area. Thank you very much.
Thank you, Jeff.
Okay, we'll see you later. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show, for listening each and every week. It really helps if you go to these places where we send you. Either you go to YouTube, or you're listening to the radio show, or you go to the podcasts that we do. Daryl, do you have those 8 podcasts for me?
I do. It's Apple Podcasts, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, and Podclips.io.
Podclips.io is a new podcast, and I really appreciate it if you'd go there and sign up, help those people out. They got a lot of great information on the financial sector, which is where I am, which is where this show is. We do help people each and every week, because the information that we have is not readily available unless you're out there talking to real estate agents and loan officers and people in the business about what's going on in their area. One of the people that we have on the show, and we're really lucky to have him, he's been on the show several times, many times over the years, and the show's been on for, I guess, 7 or 8 years now, is Charles Giscombe. He's the manager for Malibu Funding in the Las Vegas market. He's here to talk to us about some of the opportunities available. Interest rates have gone up in the products, but how are we able to help those people who may or may not be able to, take advantage of the low? They're still low, but what do you have for us, Charles, and how are you?
I'm doing good, Jeff. Thanks for having me on again. Always living the dream. It's another day in the mortgage industry. Excited as always to get business done.
Absolutely. So as I was saying, Las Vegas market has different challenges than certain other markets. The products that we offer there, as well as other places that can help, especially, I guess, if they're the type of person who has not necessarily W-2 income, or not necessarily a cookie cutter type deal, which most lenders would prefer. What are you suggesting or helping your clients do?
Well, Jeff, that's a great question, and we talked about it often. The traditional loans obviously are still getting done. Traditional meaning Fannie Mae, Freddie Mac, government loans, which is FHA, USDA, VA. Those loans are still getting done. But as we talked about before, with the interest rates going up, it looks now that the non-QM market has taken over a larger share of the mortgages that are getting done. But when the interest rates in the traditional market go up, obviously the rates go up across the board, but now you close the gap between the interest rates on traditional loans and our non-QM loans. And our non-QM loans are non-qualified mortgages that don't have to follow the same red tape as what a normal traditional loan is. If you're buying a primary residence, you always have to abide by trade and RESPA law. Those are the laws that you have to abide by in order to make sure that you're giving fair lending practices and giving, responsible and being compliant with clients who are purchasing. But even from an investment standpoint, you don't have to abide by trade and RESPA so much with those kind of deals. And the interest rates are getting lower and lower, and they're closing the gap between a traditional loan and a non-QM mortgage. So I would tell an individual who doesn't have the traditional structure, which is the W-2s or the tax returns, but they do make a good living, and they may have bank statements, and they have the ability to show that they can repay, which is the ATR. Put those in those type of loans and see how that structure matches out for them. Because, Jeff, it does give them an opportunity to get in. It shows them more income and shows their ability to repay, which is an easier process for them to qualify in order to get into a transaction and still be in this market, even if their interest rates are going up.
Let me a lot of I guess businesses in Las Vegas, let's just go to the casinos, because a lot of them have been shut down. Although they've been open for some time, most of the employees are only back for, let's say, 4 months, if there's an income gap, because you got laid off for a while. How do you handle that, and how do you advise your clients?
Well, a lot of times, one thing about this is people are very aware of what's going on. The pandemic has created situations that have put people in bad situations, but it also has made a lot of the lenders and the banks be more responsive, more cooperative, and understanding exactly what's going on. So you have some non-QM programs that come back into the fold that are now saying we normally would take 12 or 24 months bank statements, but if you can provide 2 months bank statement for us, we'll go by that because you're still showing the ability to repay. And as long as you're back on your job right now and you can prove that you are going to be employed for the next year to 2 years to come, barring no other situations or disasters occurring or the pandemics occurring, then they can prove that you're going to have a steady income, which will still justify and verify that you have the ability to repay and that you can get into a loan structure and get financed with a mortgage.
Let me ask you a question. There's been a lot of consolidation. Well, maybe not consolidation is not the right word, but a lot of larger mortgage entities have gone public. United Wholesale, Linsure, certainly Quicken or Rocket Mortgage. The advantage of those companies doing that versus mortgage bankers who don't do that. How is there a difference for someone who is watching the news as to whether the products are better at one place versus another, or is all that just big business and it really doesn't matter?
Well, certain people specify certain things. I wouldn't go try to find my lowest interest rate possible with someone who has to broker because they're going to be hit with the overlays. But if you have a bigger bank, if you have a Quicken or a United Wholesale, you have these banks, they're direct to Fannie. And so at the end of the day, you're going to get better pricing. You may not have the overlays and things that we talk about. So, yeah, there is a difference between going to a big bank versus smaller bank. But I always say, as far as Malibu Funding is concerned, sometimes you're not going to be the lowest or the cheapest rate in the market. But if you're willing to put the work in for someone who has a more difficult situation, their situation may need some more structure, some more help. It may just be more time consuming. But we always pride ourselves at Malibu to do that, Jeff, so I never have an issue. And even if the A rate's a little bit higher and you go the distance to get someone qualified, whether it's a big bank or a small bank, at the end of the day, service provided, getting a new person into their dream is super important. So I would say, yeah, there is difference in part pricing because you have some individuals that are rate conscious, and you have some individuals that are term conscious, and then you have some individuals that saying, please just help me get in. And so you may not take that person to one of the bigger institutions, but if you can go to a place that will work with them and have a loan officer who's willing to spend the time with them, then you won't see too much of a difference because obviously they're just going to be thankful that they're into a property job.
Yeah, there are haves and have-nots in this particular economy because of COVID, right? And we find people who have had a job, who lost their job, who came back to work maybe a few months ago. Those are different types of borrowers than, let's say, somebody who's in even the mortgage industry or the real estate business, who have really had booming year last year. There's just different ways to look at each borrower. And I think mortgage brokers, mortgage bankers have more of an opportunity to work with those people who have situations in, let's say, the cookie cutter loan that goes to United Wholesale, goes to Quicken, goes to Bank of America, goes to, Chase, Wells Fargo. I think that particular customer service, it's right.
I completely agree with you, Jeff, because at the end of the day, those larger places can take A1 paper and don't have to settle for anything less than that. And you get to other individuals who work hard for the business and have individuals locally that are trying to be of the people and trying to help those individuals around there and be more hands-on. Absolutely, I completely agree with you. From a banker standpoint, like Malibu is, we can help an individual who has a bitter tough of a situation, who can't possibly really justify that income, but as far as being laid off from COVID, but does have the ability to repay, we work with those individuals, Jeff.
Yeah, that's excellent. Chuck, could you shout out your phone number for people who are looking for not only a terrific loan officer, but someone with knowledge in the business who could definitely take the time and help them?
Absolutely. I can be reached at 702-328-5191. Again, that's 702-328-5191. And my email address is charles@malibufunding.biz. Again, charles@malibufunding.boy-isaac-zenith.
Chuck, thank you very much for coming on the show. I know we get to talking and we always have an interesting conversation about what the market is doing, where it's heading. I really appreciate your time.
Jeff, always a pleasure, and anytime I can help our listeners help get into a mortgage, Jeff, I am always available.
Excellent. Thank you very much. That's Charles Giscombe from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show. We try to bring interesting and qualified and just fantastic people to the show each and every week. Hey, if you like the show, go to malibufunding.com and say you like the show. If you like the show, go to youtube.com, Jeff Barton, the mortgage voice. Yeah, and say you like the show. We have a number of podcasts we're on. Daryl, what are those podcasts?
Oh, hold on. I just reduced the page. Hold on a second.
Well, it's Podcast.io.
Okay,
It's Spreaker.
Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, of course, and Podclips.io, our new edition.
Excellent. Thank you very much. And again, if you go to any of these places, just say that you like it, sign up. We would love that because it helps us get to more people. The more people that know about mortgages, about real estate, it really helps the market and it helps people in their education towards financial stability. With us is a person who has not only in that business and been doing it for years, but is also the star. And I believe it's on Lifetime, or is it A&E, Shanti?
Lifetime.
It's like that's what I thought. Marrying Millions, the star of Marrying Millions, is with us as a real estate investor and real estate agent. Done it for a long time. Shanti Chun, and how are you today, by the way?
I am wonderful, Jeff. Thank you very much for having me again on the show.
Thank you very much for coming on the show. Okay, let's get the celebrity gossip out of the way. How's the show going, and what's happening this season?
Well, I suppose you have been following, but because you're an extremely busy guy. But,
I've seen the show. What do you mean? I just haven't seen it yet this year because I'm, like you say, busy.
Yes, right. So we're in season 2, and we're actually gearing towards the end of season 2. So I was only on half of the season 2 so far because, my situation is very different from the other couples.
Right.
So that's the only reason.
Well, the dating scene, how is that, and how are they incorporating your unsuccessful last season in terms of the relationship with your new relationship this year? How's that happening?
Well, the show is based on couples, obviously, and
right.
with that wide financial gap. So it takes two people to make a relationship. And the start of season 2, and I don't want to give too much away because there's a lot of people that's just starting to watch season 1.
Just tease it out for us. Give us a little taste so that we can make sure we get to it.
Well, season 2, like I said, my situation is very different from the other couples. So because of that, we can only go so far, if you will. I mean,
yes.
of course, I'm very lovable. If you watch, if you've seen the show or you know me, you know that I'm very lovable, and I know everybody wants to still see me. But until I get into certain situations or have a situationship, then I'll be able to continue on.
I see.
So
I see. We'll see what happens. Okay, let's put on your investment hat. You're involved in a number of real estate opportunities and investments in Las Vegas. Tell us a little bit about that, how you got into it, and what are some of the challenges in that particular market?
Currently, right?
Yes, please.
Yes. Okay. Well, I have been sleeping for a whole year like the rest of the world. And like deep slumber, and then all of a sudden, bam, this year, 2021, it has been crazy. The Las Vegas market and as a seller's market is booming. We have, a month's supply maybe,
Wow.
We have like less than 4,000 currently on the market here in Las Vegas.
That is crazy. You're right.
Yeah, it's insane. So, every single property right now that's on the market is, has 5, 10, 20 offers. So almost like
wow.
From a decade ago. But
the situation is a little bit different, obviously. But so I mean, I'm busy. I have about 4 in contract right now,
Wow.
and a couple more coming. So it's good. It's good being a seller's agent in this market.
Absolutely right. Being a seller's agent. Okay, so I never liked it as much as I like being a buyer's agent, although buyers are liars. But sellers, in general, you have to sell them twice. One, you have to sell them on you, then you have to sell their property. Probably find that pretty easy, just because your personality lends itself towards people trusting you, and to be able to do the job, you have a track record of many years doing that. What are the price ranges we're talking about here in some of these listings that you do have?
Well, it ranges. It's around 200,000 all the way up to over $500,000 so far, and even in the high end market, even in the $1 million to $2 million range right now, we're seeing actually quite a bit of movement. So there are people out there that can qualify, that actually have a lot of money saved up, and they're coming out of the woodworks right now, which is great. Now, as a seller's agent, I started out as a buyer's agent as well, being an agent, but eventually you want to become a seller's agent, because it is a lot easier. That same buyer is now using you as a seller, using you as an agent when they're selling. And it's just easy because you're just listing the property basically and just waiting for offers.
Now it is, yeah, I agree.
Yeah. The price range, median price range right now, God, it's pretty high, right? Over almost
300,000, 310, 315, something like that?
Yeah, it's more mid. It's more mid to late.
Oh, so it's really risen in the last few months. I hadn't kept up with it.
Oh, yeah, absolutely. So it's been great. And, what I see, and, we don't know, obviously, no one has a crystal ball, but, what I see in the market is, there might be a slight pause, maybe in the next year, or a correction, if you will, but not something significant, because there's no properties, there's no there's no foreclosures, there's no short sales or anything of that type right now. Now, granted, the moratorium for rentals is getting listed at the end of this month.
Yep, March 31st. Yep.
Yes. So we'll kind of watch to see what happens. Now, in my experience, and the people that I know that are investors as well, or landlords, because that's who I am. I'm a landlord. I'm an investor. Most of the people that I know have not been struggling financially.
Right.
But I do hear that the consumer debt, is slightly high. So we'll just see what happens in the next, few months with everything. And now, as an investor and as a buyer, do I hope for the market to not crash, if you will? I don't want anything to crash, because I want people to be successful on both ends, buyers and sellers, right, and homeowners. Of course. So I don't want to crash, but as an investor and a buyer, do I want to see a little bit of a pause or a correction, or even a little decrease? Absolutely, because then I can jump on the deals.
Do you think, Janti, that you're going to see renters get kicked out of their homes, or not their homes, but their rental units? I know that Vegas has an easier way to be able to do that than some other states.
Yes. Well, the government had a few programs in place to help some of these renters, basically if they lost their job, whatever. Right. Now, the negative part of what happened last year, during the COVID, is that there are people that aren't in financial situations or difficult financial situations, but they're taking advantage of the situation. Do you know what I mean?
Yes, I do.
So, yeah, one of my tenants actually was doing that in one of my rental properties.
I see. They could afford it, but they decided not to pay. I understand. And so their long-term plan is to what?
Yeah, for me.
Leave? Is that what they're planning to do? Just walk away from the deal? If you're not paying your rent for a year, that's a big number.
Mhm. Yeah. For me, but I was able to convince them to leave, actually. So that was good. I didn't have to, lose any more money. So
Right.
thank God. And it was only one tenant, thank God. So, I'm praying every day.
Hey, listen, John T., we're at the end of it. Shout out your phone number for somebody who needs a terrific person to work with when they come out to Vegas, or whether they need someone locally to be able to handle their real estate transactions.
Absolutely, yes. Anything in Vegas or Vegas areas or even other, cities, I can help you with that too. Realty One Group, my number is 702-467-3131.
Excellent. Thank you very much for coming on the show. As always, you are a bright light and somebody who knows the market, so I appreciate it.
Thank you, Jeff. Nice
Okay.
talking to you again.
Okay. Yeah, it's great talking to you too. I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.